In this video, I'm going to explain the difference between a tax deduction and a tax credit. A lot of business owners ask me this question all the time, and I'm going to explain it here in this video. If it's your first time here, my name is Navi Miraj. I'm a CPA, and I help small business owners and real estate professionals save thousands of dollars in taxes. But the reason for this video is to explain the difference between tax credits and tax deductions. I get this question all the time. But before we jump into it, I'm going to have to lay the foundation and provide some context to you. So let's assume you're a small business owner and your business had revenues of $130,000. And also you had expenses such as advertising or office expenses, utilities of $30,000. And so you're left with a net profit of $100,000. Now, what tax do you pay on that? I've got a whole separate video that goes into detail as to what taxes you will pay. But in summary, you pay self-employment taxes of 15.3%, and you also pay federal income tax on that money. So on the $100,000 of income, the self-employment tax you would pay in this scenario is $15,300. Now, for some of you accountants and CPAs out there, I know there's some tax strategies to reduce the self-employment tax, but I'm trying to keep it simple in this video. So again, $15,300 in self-employment tax. You also pay federal income tax, which is a little bit more technical than just the 15.3% times this number, right? We have a tax bracket system here in the US. So for this $100,000, that gets divvied up within the different tax brackets that we have. So assuming you're a single, the first $9,875 of the $100,000 is going to pay $987 in taxes. The dollars afterwards, $9,876 of the profit through $40,125 of the profit is taxed at 12%, and so forth and so on. Now in this example, the business earned $100,000, and so dollar number 85,526 through that 100,000 is getting taxed at 24%, and in this example, that's $3,474. So the total federal income tax paid in this scenario is $18,079. I know what you're thinking. 15,300 plus 18,000, that's a lot of money in taxes, right? So you want to maximize your deduction. So what is a deduction going to get you in terms of tax savings? So in this example, I'm saying, what would an additional $2,000 tax deduction save you in taxes? And so the math works like this. $2,000 times 15.3%, because you will save that amount in self-employment tax, saves you $306 in self-employment taxes. In federal income tax, that $2,000 deduction comes out of this tax bracket. It's the last $2,000 that you earned, right? And so the $2,000 times the 24% equals $480. So when you add these two together, your total tax savings of a $2,000 deduction is $786. Now I'm just keeping it simple here. There are some technicalities, but in general, that's what you're saving. Now, let's compare that to a $2,000 tax credit. Remember that this person is paying $18,079 in federal income tax. A $2,000 tax credit is actually going to take the $2,000 right from their tax liability. So it reduces the tax liability down to $16,079. So you can easily see that a $2,000 deduction saves you $786, but a $2,000 tax credit, such as the child tax credit, will save you $2,000. So the difference there is roughly $1,200 in change, and so you can see that a credit is definitely more beneficial to you than a deduction. If you found this video insightful, please do like it. You can leave me a comment and subscribe, and I'll see you in the next video.